Hey everyone, welcome back to Corporate Decoder. Ever wonder what happens when a physical therapy company takes a tumble? Well, today we're cracking open US Physical Therapy's latest report, and trust me, it's more than just stretching exercises and ice packs. Let's dive in. First, let's talk about timing. This report is dated February 26th, 2025, which means it's giving us a snapshot of what happened at the end of 2024. Think of it as the final score of last year's game. Now let's get to the heart of the matter, the financial results. The report tells us that US Physical Therapy, or USPH for short, shared their performance numbers for the last 3 months of 2024, as well as the entire year. This is crucial because it helps investors see not just the immediate picture, but also the bigger trend over the past year. It's like comparing a single game to the entire season's performance. What are these results exactly? Well, they released a press statement or an announcement to the public that summarizes all the important information, and that press release is an attachment to this report, which is pretty standard. There's a legal disclaimer here, which is something you will almost always see in these reports. It's stating that the report is not necessarily filed in the legal sense for certain purposes. What this means is that, while it's public information, it might not be used in the same way as other official documents if someone sues them. Basically, there's a level of separation so that some of the information cannot be used against them in court. Moving on, there's something interesting buried a bit further down the report about dividends, which are basically cash payments that a company makes to its shareholders. The board of directors, which are like the company's governing body, decided to increase the dividend. They are increasing from $0.44 per share to $0.45 per share. It may not seem like a lot, but it's a signal that the company thinks it's doing well and wants to share the profits with its investors. This dividend is scheduled to be paid out in April to those who own the stock by mid-March. So if you were a shareholder by then, you'd be getting a little extra cash in your account. Now let's dig into that press release which we mentioned earlier, the one attached to this report. This is where we'll find more details about how the company actually performed. Now, scrolling to this report, we have some key information and financial data. In this report, we have revenues, earnings, and other important data. I want to touch on a few key numbers because everyone cares about the financials. Looking at the year as a whole, the company is reporting revenue of $628.7 million. It's a big number, but what does it really mean? This is all the money the company brought in from its physical therapy clinics and other services. But not all of that money is profit. After paying all the bills, the company's income from continuing operations attributable to US Physical Therapy Inc., which is basically their net income, comes out to $23.4 million. If we narrow down the focus to just the last 3 months of the year, it tells a slightly different story. For the last 3 months, their revenue was $154.1 million. Not bad. For that same period, their income, or the amount that is left after paying all the bills, was actually a loss of $1.3 million. Not as hot. Finally, let's quickly glance at the balance sheet. This is like the company's financial snapshot at a particular moment in time. As of the end of December of 2024, US Physical Therapy had about $31.4 million in cash and cash equivalents. That's the money they have readily available. And the total value of everything the company owns, which includes things like buildings, equipment, and investments, adds up to $849.1 million. So, what's the big picture here? It's clear that US Physical Therapy had a mixed year. There was the year-long revenue growth and a dividend increase, which are definitely good signs. However, that end-of-the-year loss is something to pay attention to. The report mentions things like bad weather affecting their clinics, which is obviously outside of their control. The press release also mentions certain legal and accounting fees that the company incurred, so it's important to keep these in mind when evaluating the results. Another thing to consider are that most of the company's business depends on referrals from doctors. So the better their relationship with doctors are, the more potential business they can receive. They can also try to increase the number of visits per patient to increase revenues as well. One more item is the company's growth strategy. In the press release, they mention that acquisitions remain a key part of their growth strategy. They're planning to buy up other clinics to expand their reach. So overall, what do we learn from this report? US Physical Therapy is a company in transition. Their overall revenue is trending up, and that's good. They are also rewarding their shareholders by increasing their dividends. These are both strong points for the company. However, the end-of-year loss is a concern. The company's future hinges on a few key factors. Can they effectively manage their relationships with doctors to keep those referrals coming? Can they successfully integrate new clinics they acquire and expand their reach? And perhaps most importantly, can they keep their costs under control to avoid any future quarterly losses? If you are an investor, the risks are that the company may not grow as quickly as it wants to, or those legal fees could take a bigger bite out of their profits than expected. US. Physical therapy looks to be in an okay position but faces both opportunities and threats. I would say it's a company to keep a close eye on. Thanks for watching. If you found this breakdown helpful, please hit that like button, leave a comment, and subscribe for more corporate deep dives. Until next time.